Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Wednesday, FOMC Day, December 19th, 2018, getting onto the 250 area, 250 right after that. We're getting close to where the stock market cash part of it's going to close out. As you can see, at this point at least, we have a lower day. The settlement in the metals is going to be substantially higher than this, but the aftermarket, as you can see, down. What do I mean by aftermarket? Metal markets determine a settlement at 12:30 p.m. Central Standard Time, but they trade longer than that. They trade 3.5 hours longer till 4 p.m. Central Standard Time. So the settlement prices are already in. They've been determined. But now that the Fed has done its talking and so on, you can see the pressure. And to make life really simple, if you get my updates, and I want to remind you about this, my market research, what's so important. I'm going to cover tonight what the Fed did, where the Fed tripped up on the market. Some will say dovish, others are going to say not dovish enough. What's Fed neutral on the interest rates and so on. If you don't have my research, you might want to get a free trial to it. The key also is in the morning when I do my morning videos. Those videos set you up for the trade during the day. I do them at 8:30 and I cover 40 markets. And no, you don't have to watch the whole video to get to the markets you want, because I start off with the stock indices every day, then I move to the currency and just drag where you're at on the video and away you go. But in order to see that video, you need a user ID and a password, because I do say this is where I think buying's happening, selling's happening now. This is what I think you should do. I'm very specific, unlike the generalities here of just talking charts. So you might want to do that. Go to our website. You'll see an icon over this whole thing and you can play with it. So let's get to the gold chart and see what's going on. As you can see, at least at this hour, the market is up and the bias has been straight on up. The market's had a pretty good run, even with it being down late in the day right now, as you can see. And you have a big reversal today. You've gone from 1262 to 1245. So this bullish part of the market has stalled out at a bare minimum. Does that mean the party's over? No. I want you to look at where that market went, and for those of you that get my price counts and so on, take a look at that. You got right into that area of the first price count and the market stalled out. It's exactly what the price count theory is about, a zone where the market might go to and then stall a bit. And that's what happened on that work. When we come over to what the swing lines are doing, you have a lower low and a higher high. You are not trending. That part of the market is not occurring. Support is back at the 1240-150 level, what I call the 18-day average of closes. And guess where the resistance came in? I'm going to show it. Look at your upper Bollinger Band. You tell me where the market went. Today's high, 1262.20. The upper Bollinger Band, 1261.20. And you know what I'm going to say? The first challenge of upper Bollinger Bands or lower ones is where I think pros take money off the table. And that's what I think you ran into. The pros saw that number and they said, taking money off the table. Now the pullback is in force, and the question is, how does the market respond near what I call that line in the sand, the 18-day average of closes? Doesn't have to get there. I don't walk on water. I don't know. But I'm assuming it's going to, and we'll see what it does there. Momentum turned down in the market. So you have a market that is not trending. It got up to a high point. The Bollinger Band stalled, had a big key reversal down. What's a key reversal different from an outside day down? On a key reversal, you take out the previous day's high, low, and close lower. Now let me tell you what's wrong with this chart. You heard what I just said. This is where you're at now. You might have closed higher on the day. 12:30 is when the market closed, well before the 1 o'clock Fed statement. So it's going to look one way on the chart today. It's going to look completely different tomorrow. I know it's confusing, but it's how it's going to be. Take a look at the gold ETF. This is more in sync with what's really going on. Upper Bollinger Band, 118.88. Today's high, 118.96, big reversal. Support back at the 18-day average pattern. Higher high, lower low, momentum turned down. That's a key reversal, a real one. Why? You made the highest high of the move. For sure you had the outside day. You closed lower, the higher high, and you closed under the opening. Bingo. Now, do I know that it's going to exactly close there? No, but with a few minutes left, I think I'm pretty safe saying it. And you also, in the GDX, the gold miners, you saw finally a big reaction, big enough with today's break low of 1996 to take out this low. So you've broken the pattern of higher highs and higher lows. You've gone to neutral. You lost the embedded reading. Let me bring you back here. That's embedded. Embedded means the slow stochastic had for several days or more both the K and the D line, the red and the blue, going sideways over 80. When it's lost, the odds are strong that prices are going to make a run for the 18-day average. Does that work all the time? No. I'll give you an example of one that didn't work. Take a look at the 10-year notes tonight. You'll see one that didn't work. I can give you plenty that do work, believe me. But that was one that didn't work. Now we'll see if this one does work by getting back to that number. The gold-silver ratio not favoring the base metals. My concept is that two things have to be going on. Number one, you got to be under this 18-day moving average of closes, which you're not. The higher the number goes, the more it favors the gold market over the silver. To get a real bull market going in gold, I would assume the dollar's going to be going down. Metal prices will flatten out, maybe talk of inflation. If you heard what the Fed chair said today, he was talking along those lines. You're not getting it just yet. And by the way, when asked what is Fed neutral rate, it's a moving target. He was very clear on it. I don't think the Fed chair did as bad as the market is saying he did, but it's what it is. What he did say is they're not going to listen to the president. They're an independent agency. They're going to do what they want without naming the president or alluding to that. But they're talking 2 more rate hikes in 2019, which will impact the metal markets, obviously. Not the one that there was hope for. And certainly they did the hike today with the president telling them they shouldn't go ahead with it. They're independent. In the silver, we now have lower highs, lower lows. So the trend is down, momentum's turning down, but the bias is up. So this market probably is caught between Bollinger Band 100-day average and 18. I'm expecting a churn right here, not a collapse. The copper market riding the lower Bollinger Band in an oversold market that is not trending. But what it's doing very effective is it's pushing out the lower band. This market acts like a market that does not want to bounce, that it wants to push that out. Also, if you go back and you look at the past 4 years, in China, at their exchanges that trade copper, typically there's a big buildup of short interest in the market at this time where the market tries to push on it on a seasonal basis. Those dates where it builds have been building quicker than normal over the past 4 years. I don't understand why, but that's what's been going on, and we're in what we call a weak period for that. In the platinum market, well, it tried the upside at first today, and boy, did it give up miserably on that, down $9. Now, here also is a situation, and this is why you've got to look at these things. You had an embedded reading. Right here, you lose it. The odds favor you're going to make a run to the 18-day average of closes. And what you don't want to see is the market under the most recent low, which it hasn't yet done, but it could. So it's a market that got darn close. Close is not what we're about. We're about how close did it get. Yes, in theory, it made a run, but it didn't hit the number. Often it does. In the palladium market, you got back up to the upper Bollinger Band stalling. And as I know I'm a broken record on this market. I think I've been saying over and over, this is the strongest of all the metals. I'm going to stay with that concept until I have reason to change it. Close under the 18-day average and you'll get me to shake that thinking, but you haven't done that. Last, the dollar index. Where do you think the pros would have covered? You're coming in today. Here's the lower Bollinger Band. It's not a trend market, but I'm going to teach, and that's what I do in my charting course. You get down to that Bollinger Band, be careful. That's where the pros, those that are short for whatever reason they're short, might cover. You get down here today, 95, 99.5, the lower Bollinger Band, and bang, you pop right away from it rather smartly. So, some of this stuff, it becomes second nature as you watch the market in understanding it. Doesn't mean it's going to work, but you understand what's going on. I teach this, I write about it in my market research, and of course, you know that I'm offering my charting course as a special for just $99.95 this season. All you need to do is go to our website. Under the word education, you can study the charting course. I've got a video about it, and it answers all the questions that you may have on our fact sheet. And if you haven't seen my market research, not only what I write, like I'm going to write tonight a big dissertation on what the FOMC did, but you might want to see that morning video because it's so important. If you like these videos, you're going to be hooked on the other ones, and I am going to find a way to make them available to you, but there'll be a fee for them next year, but just the video, minor fee. I'm Ira Epstein. Have a good day. See you tomorrow.